Hey guys, welcome to this week's stock market recap. I'm Robert Montez with Nexus Wealth Management. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the week of August 15th through 22nd, 2025. So first off, what was the recap? We saw the S&P finish up 0.3%. We saw the Dow finish up 1.5%, and then we saw the Nasdaq down 0.6%. What led to this as far as what helped? Well, the main thing was Federal Reserve Chair Powell's speech at Jackson Hole, where he did confirm that rates most likely will be coming down both in September and December. We're seeing the likelihood of that still hover around that 90% likelihood. So that is good news. That does get factored into, obviously, stock market prices, and it does impact industries like consumer discretionary spending as well as real estate. The second thing we saw was earnings reports continue to come out from companies like Walmart, Home Depot, Target, companies that are value-based companies where people are kind of spending money on day-to-day stuff. And those numbers show that yes, people are still spending money despite concerns on tariffs. So that was very strong news. Third thing we saw is internationally, as the tariffs have kind of settled in and people know what to expect and that uncertainty is disappearing, we've seen international equities to have a pretty big boost. I believe this is the second week in a row we saw international equities outperform domestic equities. So something to pay attention to. Now, what hurt the market? What hurt the market primarily where there were some economic indicators that weren't great. So we were seeing unemployment sitting at 4.2%. We've also seen a downgrading in how many jobs were created from March to May by 818,000 jobs. This led to the Bureau of Labor Statistics commissioner being fired by President Trump's administration. I know this has been politicized. Go back, look at the numbers. This has been something that's been happening over and over since President Biden's administration. And it's not really a political thing. It's more of just it's very hard to make accurate decisions when you have inaccurate numbers consistently being reported. The other thing we've seen is that people are starting to shift a little bit away from AI technology-based companies, starting to sell out of some of those, take their profits, just because those companies are at crazy prices right now. So hopefully it continues to go up, but it is something to pay attention to because there are concerns that it might not last and that spending in those sectors can't maintain its current trajectory. As far as key takeaways for you as the consumer, I would definitely say go back and look at your portfolios. Make sure you are appropriately diversified, that you're not over concentrated in any one industry like tech. Maybe look at what your holdings look like in things such as consumer discretionary spendings. With rate cuts coming down, that should impact there. Of course, you need to consult with a professional before you make any decisions. If you would like a second opinion on what you're doing, don't hesitate to reach out. We'd love to be a second resource for you and give you a second set of eyes on what you're doing. Thank you so much. Please consider leaving a like, leave a comment, let us know how we're doing or if I missed anything. Until next week, we'll see you then. Take care, guys.